In this video we are going to talk about how to become a millionaire with stocks. So before starting this video, please like this video and subscribe to this channel for our future updates. Investing in publicly traded companies is commonly advocated as a way to develop real wealth for yourself and future generations of your family. But given how volatile the stock market is, how do people make money from stocks? Being affluent in the stock market may appear to be limited to Wall Street insiders or wealthy investors. You don't have to be wealthy or knowledgeable about investing to make a lot of money. You will, however, require a strategy. And if you follow these 3 steps, you could be on your way to becoming a multimillionaire. Time is your friend when it comes to making money in the stock market. Investing is a long-term game, and there's no surefire way to get rich quickly. You may be able to make more money if you have more time to invest. It is, nevertheless, considerably better to start investing now rather than later. Choosing the right assets is crucial if you want to make the maximum money, but the process of buying stocks can be confusing. While it is possible to make a lot of money by investing in the next big thing, such as a shiny new startup that promises to change the world, you will usually make more money by sticking to slow but steady investments. The S&P 500 has averaged a 10% annual return since its inception. Additionally, these funds are among the safest types of investments available. The S&P 500 has seen its fair share of corrections and crashes over the years, but it has always rebounded. The stock market will surely experience a downturn at some point during your investing career. Market corrections are normal and healthy, but they may be scary. If you're worried about losing money, it's tempting to try to timing the market. However, this can sometimes result in more harm than good. Even experts are unsure how the stock market will react because it is so unpredictable. Take the market crash of 2020, for example. Not only was the crash surprising, but so was the near-instantaneous comeback. And if you try to play the market but end up buying and selling at the wrong moments, you may lose a lot of money, making your goal of becoming a multi-millionaire much more difficult. Rather than trying to time the market, it's better to ride out the storms. If you put your money in the right places, your investments should eventually recover. On the stock market, becoming a multi-millionaire is difficult, but not impossible. If you get started as soon as possible and build a strategy, it's easier than you think to make money through investing. Number 1. Gain a thorough understanding of the stock market and maintain your focus. If you want to grow your money in the stock market, you must have a working knowledge of the stock market and be comfortable with long-term investing. You shouldn't expect to become a millionaire overnight as a result of a lucky stock pick, so don't hold your breath. If you need help getting started, you can talk to a financial advisor. Maintain focus on your investment goals and keep your calm during downturns. Allow the market to take care of the heavy lifting. Number 2. Make an investment budget. A great investing method is to budget your earnings. Investing payments should be included in your monthly budget so you can keep track of your investments. Look for ways to save money so that you can put more money into your investment. Cutting back on other expenses, regardless of how much you've previously put into your savings, may allow you to invest even more. It's not a bad idea to hire someone to help you organize your funds. Facet Wealth is a financial planning firm that pairs you with a certified financial planner to manage your assets, savings, and other financial problems. Number 3. Invest in index funds. Expecting to get wealthy by investing in just one stock is a little unrealistic. This is why index funds have gained so much traction. You diversify your portfolio when you invest in an index fund. Because you are investing in a range of companies in one fund, your investment in each fund is essentially smaller. As a result, each firm offers you a lower salary. You will, however, lose less money if some of the companies turn out to be duds. Investing in index funds is suited for a buy and hold strategy and building wealth over time in the stock market, rather than searching for the one stock that will change your life forever. Number 4. Purchase and hold. Using Apple as an example, you can see how buying and owning a stock can be beneficial to your financial circumstances. Buy and hold refers to purchasing stock shares and holding them for the long term, even when the stock market is down. The buy and hold approach is lauded by the most prominent investors. In 2016, Warren Buffett observed, "The money is made in investments by investing and owning good enterprises for long periods of time." Number 5. Buy and hold. The buy and hold strategy is the exact opposite of this. Shorting equities is a strategy used by those who desire to make money in the stock market in a short period of time. The basic concept is that you borrow stocks and then sell them for cash at current market levels. You will, however, need to replenish the stock you sold because you borrowed it. You're also responsible for paying dividends for the time the shares were borrowed. Short sellers anticipate a significant drop in the stock price, allowing them to repurchase it at a cheaper cost. Shorting the market requires knowledge of the market and an educated guess as to when the stocks will collapse. You don't want to take out a long-term loan from them, since you'll wind up owing a lot of money in dividends. If you're interested in short selling, you can buy and sell stocks through a brokerage firm like E-Trade. Number 6. Make regular contributions to your portfolio. Contributing to your assets on a regular basis over time is a terrific strategy to develop wealth in the stock market. Many people do not have huge sums of money to invest at any particular time, but they do have smaller amounts to invest over time. Let's imagine you have a $3,000 investment to begin with. If you put $500 in your bank account every month for 30 years at 6% interest, you'll have $523,022. You'd have $1,027,897 if you paid $1,000 per month for 30 years. For those with a bit more experience, personal capital is a fantastic option. How to make money in the stock market using math. In 1980, Apple's initial public offering, IPO, cost $22 per share. If you had put $5,000 into the stock and held it until August 2018, the price would have climbed to $227.63 per share, more than 10 times its original worth. But more critically, the stock had split 56 times at the time. You could have bought 227 shares for $5,000 in 1980. After the corporation has divided its stock and amended its business plan a few times, you'd hold 12,712 shares in Apple by 2018. At $227.63 per share, your $5,000 investment would have grown to $2,893,632.56. On the stock market, this is how you make money. Long-term investing like that would have made you a multimillionaire from just one company over the course of 38 years. So, in the stock market, how can you make that type of money? What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.